Hello and good day. We are analyzing the gold symbol on December 29th. On Monday, the price opened with a gap and was accompanied by selling pressure, continuing its downward movement. It balanced this daily volume imbalance here and is now moving below that level. While the price has reacted to the second volume imbalance zone and has not managed to close below this area, it is anticipated that if the price closes below this zone, it could enter a bearish phase and continue its movement toward lower price levels. One of the highly significant levels could be this ATH level, which is located at the 50% mark of this FVG and is also within the discount area of this price leg. We can use this level as an entry point for a trade if the price turns bearish. If this move is accompanied by bearish momentum and displacement, it could even reach lower price levels. On the 4-hour time frame, we can see that the price has moved downward. It has filled this gap here, but it still hasn't managed to close below this gap, and it hasn't even closed below this bearish candle. Ultimately, it reacted to this daily and 4-hour volume imbalance zone and moved upward. If the price doesn't close above this volume imbalance zone, and if it manages to close above this 4-hour level, it could enter a bullish phase and continue its upward trend. However, if the price action closes decisively below this critical 4-hour level, or even more significantly below this prominent volume imbalance zone, it could potentially enter a prolonged bearish phase and subsequently experience much lower price levels. As we can clearly observe, the ETH level is precisely located here, and ultimately, at the very lower part of the chart, there is a significant 4-hour and also a 1-hour BG zone where the price could realistically react quite strongly, and eventually, it might indeed reach this specific BG zone here, after which it could potentially enter a robust and sustained bullish phase. By analyzing the RSI as well, we can see that at this price level, it has reached its high potential zone and entered its 90 and 90 level, and ultimately, it has made a higher high here again. However, in the specific area where we meticulously observe the Relative Strength Index, or RSI, is once again positioned significantly above the 85 level, and at this crucial third peak, we distinctly notice that it regrettably fails to adequately reach the high potential zone. Instead, it is clearly forming progressively lower highs, a pattern which could very strongly indicate a significant negative divergence for us, the astute observers of market movements. Ultimately, this comprehensive analysis suggests that the price may imminently commence moving in a downward trajectory, which once again profoundly confirms our established bearish prediction toward this particular fair value gap, or FVG, zone. If the RSI subsequently pulls back and the short-term RSI specifically fails to reach the 70 level and instead decisively moves further downward, this precise confluence of events creates a highly opportune and compelling trade entry opportunity for diligently taking a sell position, thereby allowing us to effectively utilize this well-defined setup to precisely target the aforementioned FVG zone in our strategic trades. In the 1-hour time frame as well, we see that ultimately the price here is forming a doji candle. If in the next candle it moves upward again, it could react to this FVG zone here, or this order block candle, and then re-enter a bearish phase. However, if it is indeed accompanied by strong bullish momentum, it could potentially see significantly higher highs here, decisively break its previous all-time high in this specific area, and subsequently continue its robust upward trend. Wishing you success and profitable trades.